Hey everyone, Dave Hathaway. Welcome back to the channel. We discuss real estate, investing, and building wealth. Today, I kind of want to issue out a warning of stuff that I'm seeing real time to investors that are looking to get involved in short-term rental funds, short-term rental fractional ownership companies. They're basically companies that purchase short-term rental properties, they put them in a fund, and you can invest either in the fund or in the individual property and receive return. And the reason why I'm putting this out here now is because I recently went back in to look at one of these companies that I thought was reputable, that was repped by some well-known guys in the industry. And it turns out that they are, as of January, liquidating all of their properties. And I'll throw up the picture of their site. But this is here.co. They're liquidating all of their short-term rental properties. And in addition, they're closing up shop. And I don't think this is a one-off thing. Short-term rentals are not the easiest thing to handle as a scalable business. And when we look at funds like this as an investor, it's really easy to get sucked in and to see that these things pay out, 6 to 12%. They pay out monthly or quarterly distributions, and you don't have to do anything. That sounds amazing. And I know it's really easy as an investor to want those to work. But a lot of times these companies, they give you all the upsides of short-term rentals, and it's such a big buzzword as of recently, and I think it's come down. And by short-term rentals, these are just properties that are rented out on Airbnb, VRBO, and these companies don't often tell you what the downside risk is. They tell you what this upside risk, this return, hopefully properties continue to appreciate, but they don't take in big risks like the government changing their policy on zoning or permitting, completely changing. And that is a huge risk that if it's a fund that just has short-term rentals, I'd be really worried about it. And yes, 8 to 12% return is decent, but I don't think it warrants the risks that are necessarily involved there. There's other investments that you can make as an investor. The other things that they don't really talk about are like interest rate swings. What happens if their interest rate goes way up? Are they still going to be able to purchase? They're going to be able to refinance. Are they getting a 30-year fixed rate loan? Are they cash flowing? Are they not cash flowing? When those jurisdictions say, hey, we're done, we're no longer allowing short-term rentals, do those properties cash flow as long-term rentals? And most of the time, that answer is no. And the other big risk is often these companies that purchase short-term rental properties can come in and they can purchase these properties at a premium, so higher than just market rate, because they cash flow higher, but they also have a lot more fees involved. And then even though they do cash flow higher, so if they do purchase the property for more, if the government does change the zoning or the policies on short-term rentals, then they're out of luck. No one's going to purchase that property. And this is a philosophy that I like to call price that you should purchase a property for is the amount of revenue that it can generate. So if you can change a property into a short-term rental, and as a long-term rental it only pays $1,500, but as a short-term rental it pays $5,000, then you should pay more for that asset, and it's worth more because somebody else is going to pay for it, for that revenue stream, for that return. So this is just to say you got to be careful. I looked at some of the other ones like Techfesters, which is a big one that I see. I think they need a heavier investment, $25K. But when I look at a lot of the reviews and a lot of the forums in bigger pockets, people say that Tech Investors is a basic scam, that their owners are coming from, and I'll put up the screenshot, that their owners are coming from different companies, like Scout Pad and Metallic Blue Development and Superhost Labs. And one of those companies is in Chapter 7 bankruptcy. So these are not the operators that you want to invest with. People that don't have a long-term track record, people that haven't been invested in an asset class for a really long time. So let's just chat about, I guess there's one other big risk. The other big risk is that it's so popularized now over COVID that everybody started using short-term rentals that people saw how profitable they could be. So a lot of new construction houses weren't put up for long-term rentals. They were put up for short-term rentals. So you have to worry about supply demand in the short-term rental industry. And if you have a smaller area that maybe only has 600 units that are used to being the short-term rental supply, and all of a sudden you make that 1,200, now you have double the competition. So rental rates will usually go down. And COVID was an extreme time where people had extra money and they just wanted to get out, get away from the cities. So that as well is just another big risk. So the big takeaways here are: make sure you're researching the operator. If you really want to invest in a short-term fund, I don't think it's the best place that you could put your money to get a great return. But if you're really wanting to do that, Warren Buffett says he'll only invest with people that he likes, trusts, and admires. So you should be able to research at least the owner of the fund and make sure you like, trust, and admire that person, that you like their character. I have found that when I invest with people that I really like their character, that ends up being a tailwind for me, and it usually is a great investment. Because even if it goes south, I know the person has good character and they're not just going to file Chapter 7 and leave me holding the bag. So researching the operator, understanding their track record. I have found in the past, when you're investing with somebody, if they are moving into a new asset class, you just have to be super hesitant. It's much better to invest with the person that's been doing residential for their entire career, 10, 15, 20 years, and they're doing more residential than that person that's running a tech company very successfully, but then switching over to invest in short-term rentals. They're different businesses. You have to run them different. You need different connections there. The other thing with short-term rentals is the scale can be tricky. You have to have different moving pieces in different markets. So if you have, a single family short-term rental in the Smoky Mountains and then one in Myrtle Beach, you have to have two completely separate teams, so it makes them harder to manage than like a multifamily or just a big industrial complex. I also am a firm believer when you're looking at those reviews, making sure that the operator's been delivering on their promises. If they said they were going to distribute out monthly, they're distributing out cash monthly. They're hitting their projections. Another big stickler item for me when I'm investing is I really like to see that paperwork goes out on time. If paperwork does not go out on time, that means that the operator can't do the small things. So why should I trust him with the bigger things? Why should I trust him on the big thesis items? And by paperwork, I mean your statements. If they're updating you on properties, if they're supposed to send out 1099s or K1s, are those getting out on time? Or are they coming to you a month or two later? If they're coming to you a month or two later, it might be time to rethink that operator. Maybe he's overwhelmed. Maybe he doesn't have the right team. Maybe he's not able to oversee everything. And so there's some issues there. I also think it's huge to check reviews. Just go on the internet, type in, Google these companies, TechVestor, Google these companies, here.co, on these other companies. See what other investors feel about these companies. If they all say, hey, they didn't distribute out. I was looking at one I was looking at the here.co reviews, and when you look at reviews, people would say, I never received a distribution. Some people said I received one or two, and this had been a company that had been operating, I want to say, for 2 years. But you're going to start to see that track record. If people are going to be vocal if they're not receiving their money that they thought they were going to receive. So making sure you're checking reviews. And if you can't find any reviews or anything on the operators, that should be a huge red flag that it's not the operator to invest with. They don't have the track record. They don't have a past history, and they're more likely to fail. Like the startup businesses, 90% fail. So you can find a return for your money elsewhere. So I just wanted to get that off my chest to let you guys know, be super careful if you're investing in a short-term rental fractional company or a fund, even though it's enamoring, even though it's like, hey, this is easy. All you got to do is give them your money. The key is, hey, can they be trusted? Do you like them? Do you admire them? Are they going to return your money back? Are they going to do the right thing when things get tough? So hope that helps. Like and subscribe to the channel. I'll see you guys in another episode.